With everything going on in the economy right now, inflation hitting your pockets, grocery prices rising, rent climbing, and interest rates making borrowing harder, it's natural to feel overwhelmed.
You're working hard, maybe harder than ever, yet your money doesn't seem to stretch like it used to. You start wondering, should I keep saving? Should I invest? Should I take a risk or should I play it safe? I'm here to tell you, you're not alone. This conversation is happening in millions of households across America. And if you're part of the working class, an hourly worker, or just someone fighting to build something better for your family, this one's for you. Let's break it down together, Tag Premium style. Plain talk, real strategy, no hype. When inflation hits, everything you buy costs more, but your paycheck stays the same. Groceries go up. Gas goes up. Rent goes up. And what used to cost you $100 now takes $120 or more. That's what we mean when we say your money is losing value. Even if you've got your money sitting in a savings account, earning 3 or maybe 4%, inflation might be running at 6 or 7%. That means you're technically losing money, quietly, slowly, every month. But hold up, don't panic. Saving is still critical. Because before we talk about building wealth, we have to talk about stability. You can't plant seeds in a storm. You've got to secure your base first. Let's talk about why savings matter. Savings give you breathing room. It's your financial seatbelt. It doesn't make the crash go away, but it keeps you from getting thrown out the window. Life happens. The car breaks down. Hours get cut at work. Somebody gets sick. Those aren't investing moments, those are survival moments. And that's where your short-term savings come in. Think of it like this. You're not just saving for a rainy day. You're saving so you don't drown when the storm hits. So what should you be saving for? Emergency fund, non-negotiable. Family vacation or time away to reset your mind. Down payment on a house or land. Renovations or big life goals that require cash on hand. Now let's make this real with some numbers. Let's say you make about $58,000 a year, which after taxes leaves around $44,000. You spend about $3,000 a month, but your bare minimum expenses, the essentials, come to about $2,000. That means 3 months of expenses equals $6,000. 6 months equals $12,000. That's your cushion. That's your sleep at night money. That's the foundation of every financial move you make going forward. Because let me tell you, once that emergency fund is in place, your stress level changes. You don't panic when things happen. You move differently. You make decisions from power, not pressure. Now let's talk about where to keep your savings. I know a lot of people still say, I don't trust banks. I'll keep my money where I can see it. But here's the truth. Keeping your money in cash is like leaving it in a freezer. It's not working for you. A high-yield savings account is your friend. Even if it only earns 3 or 4%, it's still putting your dollars to work while keeping them accessible. And here's the trick I teach all my Tag subscribers. Use sub-accounts. Sub-accounts let you name your savings goals separately. You might have one called Emergency Fund, one called Vacation 2026, another called Down Payment. It's all in the same bank, but mentally and visually, it keeps your goals organized. That separation matters. Because when your emergency fund is mixed with your vacation fund, it's too easy to make the wrong decision. You'll pull from your future to fund your fun. Don't do that. But here's something most people don't realize. You can save too much. When you stack cash and it just sits there, not earning, not compounding, you're actually losing out on opportunity. Think of your money like a team. You've got your short-term players, that's your savings. They defend you when life throws a punch. But then you've got your offensive players, your investments. They go out and score points for your future. Once your emergency fund is built and your short-term goals are funded, it's time to put your money to work on offense. Let's talk about investing. This is where the wealthy separate themselves from the working class. And it's not because they're smarter. It's because they understand time and compounding. Over the long term, the stock market has averaged around 7 to 8% annual growth. Compare that to your savings account paying 3%. That difference, that 4 to 5% gap, is what creates wealth. Here's the thing, you don't have to start big. Start small, but start smart. Investing $100 a month consistently over 10 years can grow into something powerful. The key is consistency and patience, not luck. At Tag Premium, we teach passive investing, building a set-it-and-forget-it portfolio. You don't have to trade daily, chase hype, or time the market. You just need to understand the power of compounding and diversification. We focus on ETFs, index funds, and dividend-paying stocks, the kind that keep working for you even when you're sleeping. And for my subscribers who love getting hands-on, we even break down options, technical analysis, and swing trading, but all from a foundation of smart investing, not gambling. Now let's compare saving and investing side by side. Saving protects your today. It's safe, stable, liquid, and necessary. Investing builds your tomorrow. It's riskier, but it rewards patience and time. You need both. Here's the formula: save for security. Invest for freedom. If you're not sure where to start, do this. Build your emergency fund, 3 to 6 months of expenses. Open a high-yield savings account and organize sub-accounts by goal. Start investing even if it's $25 a week. Automate everything, so discipline becomes effortless. When you automate your wealth, you don't have to rely on motivation. You just keep growing silently in the background. Let's talk about the mindset side of this for a minute. A lot of people think wealth starts with money, but it doesn't. It starts with decisions. It starts with discipline. It starts with believing that you deserve more than survival. That's why Tag Premium exists, to teach everyday people how to think like investors, not consumers. To show you how to multiply the little you have into something powerful over time. So the next time someone tells you money isn't everything, remember this. Money isn't everything, but it touches everything that matters. Your health, your peace, your legacy. Inflation might eat your money, but knowledge multiplies it. Save smart. Invest wisely. Build consistency. Because financial freedom doesn't start with more money, it starts with better habits. And every time you make a better decision with your money, you're building something your kids and grandkids will thank you for. Your last name is your greatest asset. Guard it. Grow it. Join the movement. Learn. Invest. Build legacy. Welcome to Tag Premium, where everyday people learn to build extraordinary wealth. Is this conversation helpful so far?